How many people are familiar with like 4 hour, like the 4 hour time theory and kind of that whole system that I've talked about? I have the YouTube and stuff on. Are you guys semi familiar with how that works? I know there's a lot of, I feel like we've had a lot of new people in here recently. So are you familiar with the 4 hour time theory? All right. Just because we have a lot of people, I'll just like real quick talk about it. I do have videos on it on my YouTube and in my channel. There's examples posted, and so you can go through that at your own leisure. But basically, what I was when I was looking at cycles and price, and I was looking at the 4 hour chart, I noticed that price would typically deliver to the same candle, and the candles are in pairs, which is why there's three colors, right? So you have 10 a.m., 10 p.m., 2 a.m., 2 p.m., 6 a.m., 6 p.m. All right, that's on Eastern Standard Time. And so, just as an example, when we look at what's like important for trading, like where price tends to move around at, is it tends to gravitate towards old highs and lows, right? And then it also gravitates towards opening price. Okay, so those are like the three major things that like price will kind of gravitate towards and almost uses like markers. So the 4 hour is just that like here's just a quick example. We have this 10 a.m. candle opening price right here, and we have this 10 a.m. candle. Okay, and so if I look at this consolidation, we're not breaking higher, and so we got up close, down close, and we're looking at how price is reacting. I can look at like this up close candle is at 10 p.m. And this 10 a.m. candle really manipulates up to the 10 p.m. open and then manipulates down to the 10 a.m. open. Okay. Rebalancing this area that hasn't been balanced. That's the basis. Okay. So what you need to do is you go over here to the three dots, visual order, bring to front. Okay. And that will keep it on all the time. So this is the premise of 4 hour time theory. Okay. And I back tested this for a year and I found this to repeat over and over and over again. And even in these little consolidated areas, it's very cyclical. Okay. So if I highlight this 10 o'clock candle, the high and the low, even in this very small area of price action, look what we have. We have price barely moving. Okay. We have the 10 p.m. candle run the high, it starts the downtrend, and then the 10 a.m. candle runs the 10 a.m. low, and it starts back up. And what does it do? It goes back up to this 10 p.m. open. Okay, so even within this small little section of price, see how the same time frame candles are moving within these very important pieces of time frame. And so that's when we're looking at, well, when is a move going to happen? What I'm looking for is I'm looking for the move to happen to line up with this time frame. Okay. So then the next question typically is, well, one, where do I pick and how do I know? And then how do I take an entry? And that's the part where you have to have some sort of entry model um, that you trade with, right? Because the model has to present itself to give you a consistent RR so that your trades always have a very consistent, this is what I'm willing to risk, and this is my reward I'm looking to take off of it. All right. If you're not trading like an entry model where you know that that model gives you a 70% win rate, then you're never going to learn to be profitable because you're not using statistics and mathematics in your favor because you need to have a large sample pool to pick from, right? So as a beginner, that's something that they don't teach us. And that's something that I would encourage like people that are just starting to work on is find one entry model. And it's hard when you're, especially when you're trading groups and everybody's taking different trades and their setups and whatnot. And some people are trading all day and some people aren't. If you're new, I would say focus on one entry model until you can identify over and over and over and build a large data set of how successful am I with this entry model with the same, risking the same amount and going for the same RR? How many stop outs do I get, break evens, take profits? Okay. So going back to the 4 hour, and I talked about this the other day, there's a very consistent entry model that pops up when these 4 hour prices get ran. And let's see, let's go back in time here. All right. So if I look at, we can see like this create a huge wick. So we got movement down and then back up. And then we have a couple um, of candles over here of the same time frame. So up candle, down close, up close, down close, up close, or let's see, this was up, down, up. So we have a close in here. We have a low right here. We have an open right here. That's kind of all like in the same area. And because they're 4 hour candles, even like running just a different 4 hour candle low, like let's say it it dips between this 4 hour low, like it doesn't take this one, but it still takes this. This price action right here has ran all these candle lows. So eventually it should put in some sort of model to like move back up, right? And so we'll just draw this out in time just because that was the lowest low we take. But really, what I'm going to look at is so this must have gapped down close. So let's look at the opening price and I'll just mark that off. Okay. Because we have two opening prices that are basically nested together. And then we'll go back and we'll look at this on a lower time frame. Okay. And so I just color code everything. And that was a 2 a.m. open. Okay, what's the date on this candle? We got September 17th. That was a 2 p.m. candle. All right, let's go. Oh, this was right here. 16th through 19th. Perfect. Oh, there we go. September 16th through September 18th. Where's our price action at? Here we go. This is, no. Why is it not giving me 1 minute? Hold on, I might have to go further. I don't know why it's not giving me 16th through September 19th. Let's try on the 5. Okay, it gives me 5 minute data. All right, let me see if it gives me 1 minute data. If it doesn't, we'll just have to go back or go sooner. It's not giving me October 12th as the latest. Okay, fair enough. And let's move forward in time. October, so something after October. Da-da. All right, getting here. All right, let's the huge move down from Friday, and then the massive gap up from Monday. Back in this time frame. Okay, so notice how I highlight this candle body. Basically, price finished right here, and then so many calls were bought up across the markets that we had a massive gap up. Okay, and then price is holding 50%. Okay, so if we look at this date right here, October 17th, all right, we have the 1 minute chart. So what I'm looking at is after a low is set in, okay, this one was actually pretty tricky because technically it had a variation where it actually runs the low because this is an up close candle, and we what we want to see is a down close candle set the low. All right. Oh, maybe. But I use continuous to chart and the back test on. Okay. So when we're looking for like reversal patterns, typically what I want to see is like a down close candle set the low. All right. Um, this happened today on the when price was moving down, and typically you can like fib it, and you'll get a retracement into discount, and then you get price moving away. This one runs the low, however, it doesn't close below the low. So this actually happened on the initial retracement back up before the deep dive south. Actually got stopped up and then re-entered in here, and then like took it to one. Okay, because if we move this over here, really see, we're not getting that retracement anymore. Okay. So on this one, this is actually the retracement into discount. But a low will be put in if we're looking at price moving higher. A low will be put in, you fib the low to the first high, and we get a retracement to um, the discounted area. This one actually runs the low, like I said. Okay. So this will happen at sometimes, but we're looking at candle bodies closing. So if you get wicked out and then this immediately comes back up and it doesn't close lower, you can hop back in right into this area of discount. Okay. Let me go to, we'll take the afternoon long because that actually was a very, very clean setup. Okay. So here's a 10 a.m. candle. All right. 10 a.m. drops right to 50% of it. Okay. Okay. We have equal lows put in. We get the down close candle, sets the low right at 50%. Fib to the first high put in, and there's your entry pattern. Okay, so we're within the time range, right? Hasn't hit 2 p.m. yet. We hit 50% of a 10 a.m. fair value gap in the 10 a.m. candle. We set in a couple of green up close candle lows. All right. This is ideally what we want. We want a down close candle to set the low if we're looking to go higher. And vice versa, if we are looking to go lower, we want an up close candle to set the high. Okay. And so you take the low and fib to the first high, and here's your range. Okay. If price is going to reverse, candle bodies should come down into this area of discount. Okay. Because now we're looking at premium and discount of this small range. It should tap discount, and you're going to get varying um, degrees of how far it wants to go. Okay. This 50% level, obviously, this is going to be your most risk entry because the potential for it to fail and stop you out, this is your most amount of drawdown. Entries that come into here, obviously less drawdown. Okay. And so we have time, right? The time is, we have a 10 a.m. candle, fair value gap. We have the 10 a.m. candle that we're currently in. It hits a point area of interest, the point of interest, which is 50%. We get a down close candle. We get the retracement, the range set, and boom, we get the up close and the move away. At the 117 candle, oh, this one right here. So you can do that, but if you take this same model, okay, because this is the entry model. What I want to do is if I think that this is going to be the low, really it comes and wicks me out. Okay, it doesn't close below, but even if I re-entered, we'd actually get a close below. And so when we're looking at like when price starts to move in a different direction, we need to see we need to see candles that have a decent amount of body to them. That's idea. This coming back down and then putting in this kind of pattern where we have up close candles creating equal lows basically, that to me is basically the market telling me like, yeah, I'm not done yet. Okay. Now, if we look at price action within this point of interest, really we have our groups. Okay. And remember I said the market likes to work in threes. And so we have our first test and reaction in this fair value gap. Okay. We have our second test and reaction. Okay. Kind of does a little M and acts like it's going to run away. And then we have our third. Okay. So usually we're looking for, and these are the three runs on liquidity. Very, and obviously the higher the time frame you go, you're going to have possibly less areas of reaction amount of times, right? The 1 minute chart is the 1 minute chart. So you're going to get more that way. And so definitely on the 1 minute chart, I'm looking for like three runs on liquidity. And you can see that happens like all over the chart on the 1 minute chart. Look at this fair value gap back here. One touch, two touch, three touch, go. This creates the three tests create, that's the psychological aspect behind watching the chart. This is to get you off sides. Well, which way is it really going? Is it going further? Do I still keep my shorts? Am I entering long? What am I doing? Okay. So once that plays out, look at price action in that area. We get a very strong candle down. Down close sets the low. Okay, runs the equal lows. And we get an immediate strong candle up. Very little um, wicks to these candles. It's the candle bodies. These candle bodies just ran these candle body lows and these equal lows. Yeah. So you got to have the patience to wait for number three. That's usually when the move is going to happen. Okay, and then we can start looking at, where price has potential to go. And we have, this was probably I'd guess based off these. Let's see here. If we take this range, that's 5. So it looks like it hits 5 to a little over 5. But then you had JD that had the hack with ES, which was amazing. So there's a lot of stuff to throw in for take profits. But if you just looked at 4-hour liquidity and entry models, this happens so often. And it gives you a defined like RR. So if we go back to the 4-hour, okay, Here's on the 1 minute. Look at the three. Okay, three taps in there. And this was after hours. Really, this sets the low. Even though I don't like this, this is a massive candle move up. And we ran, this was the earnings. And you see we don't really get the entry amount because this isn't ideal for what we're looking for. We want down close candles and then we want to move away. So I'm gonna give you examples of stuff that doesn't that's invalidated. And you can see we get a up close candle creates the low, and we don't even get a retracement back to discount. Let's see back here. Let's go. Okay, let's mark this out. We're just looking at 4-hour runs on liquidity. Okay, so we get our 1, 2, 3 pops all in a row. Okay, the high to the low. We have an up close candle, so that's good news. We get, even though this is smaller candles, again, we get candle bodies that are closing very quickly through this leg. So this first candle takes out 2 candles and half of this one, and then we get a finished where we close below this range. The low gets set in, okay, and we get our movement right back up to OTE. Okay, so see how this is very mechanical? See how I have a 4-hour high? Again, it doesn't just have to line up with um, the same time frame, but when the time frame does set up, the setup seems to be a lot cleaner. Okay, like the one we just looked at from today. That low and that retracement to 50% was very, very clean. This one we have almost like a rejection block, but we still get an up close candle that sets the high. We still get a low put in, and then we still get a movement up to an area of premium. Okay, so stops at the high, entry anything in discount. So you could set entries here. Here, who knows? Sometimes it gets up to here. But stop's going to be at the high of this range fib. Okay, and then we get a nice sell off. And look where this was a really nice sell off because we get all the way down to -4, and then it kind of starts chopping around a little bit. Okay, it's not messing around in between there. And so I'm giving you like a very mechanical setup where you can just do it over and over and over again. Yesterday we talked about like your entries. If you're looking to go short, we want to find entries of premium. And if we're looking to go long, we want to find entries at discount. Okay. I'm mad that this isn't giving me the data. Okay, let's go over here. This is October 22nd. Okay, we'll highlight this blue. This was, yep, same time frame. Okay, 6 and 6. Uh, October 22nd, perfect. 22nd, 23rd. Damn it. Okay, again, not ideal, but respects it. We're in the 6 o'clock, 6 a.m. candle. We take out the 6 p.m. low. There we go. We end up getting our third tap, but it doesn't take out this low. Okay. But these mechanical entries, it gives you a reference point to take very good entries and risk not a lot. You get one more tap into OTE over here, but the low holds. Okay, and this is, so we're looking at the same time frame, right? The 4-hour candle, and then 10 a.m. ends up opening up, and we get a move into the 10 a.m. opening price, and just taps the high of this previous 10 a.m. candle. All right. So if you're having a hard time of like where to enter, if you use just a basic, like a basic fib and have, like, again, this is a major, these are 4-hour candles, so that's a major low that's ran. So we should elicit some sort of reaction off of running a previous 4-hour lower high, right? I always put my stop loss here. Okay. If it gets ran and it closes back in, then I'll try to get in still in a discounted area. So here I'm entering in discount. Okay. And I'm also watching how price reacts around this level. So typically if price is like looking for something else, like let's say for whatever reason, price was looking to run these lows, like it was going to use this fair value gap, come up into the um, premium area of this candle and then go lower. Usually price is going to really dive through this low because they're looking for people who are already long right here to take them out and to really grab that liquidity. So when I watch price around this level, this is the previous 4-hour low. I see price dives down and then it immediately closes above the leg that drove down. And then it comes down again and it wicks above it, holds it, sends a candle down, comes back up, another dive down, and then we're not closing below these lows. Okay, and we're starting to pick back up. So even if you're unsure, because this is an up close candle and it's not the conventional what we really want to see. This lowers the grade of the setup for me. However, the nice thing about this one is that it gives us the deeper discounted entry. And so if I watch this happen, okay, I say, you know what, let me fib this, see what happens here. And maybe I'm waiting for it to drive through. And we get a couple candles and it's not really driving through. Like technically after this candle, if it's gonna run this low, like it should like continue down and give like a strong push through and then immediate green candle back up if we're going to run that low to go higher. Okay. But it kind of messes around right here. At least this gives you a very discounted entry. So your stop loss, it's like, oh, cool. I'm risking $135. That's the benefit of catching entries at the 0.79 because your risk is the smallest it could be versus if we bought at the right here at equilibrium just in the discount. Okay. Now we're $300 risk. Okay, so it's gonna, you've cut your risk in half. That's that's the thing that it's hard to say what's going to happen for sure because all it has to do is hit some sort of area of discount. So you don't know if it's going to be tap and go or if it's going to come to 618. So really you're watching price action around here. And I usually just get a starter position at point 0.5 basically. That's going to be my starting position every time. And that way, let's say if I started with half the contracts and I'm like, I'm gonna start with 5. Okay, I'm risking $152 for the potential if I just go 1 to 1, right? You're still at basically a 1 to 3 RR trade. Obviously, the lower you get the entry, yeah, I have to because remember when we went to the one from this afternoon, it just tapped the point 0.5 and went. You got to remember that there's never there's never anything in the market that's 100% certain. There's there's mechanical setups and there's small ranges within those setups of that you're looking for like, hey, I want price to show me this. Like it's done this and I want it to show me this and I'm willing to accept the risk. So I look at these as if I'm looking to get in on this kind of little mechanical setup, my risk is very low. I don't want to get in. I don't want to see that it breaks out above here and get in because look at this retracement. And then what if you're adding and this retracement has you heavy in the red or you move your stop up and it comes back here and takes you out. So the point of this is to have the levels marked out where it's like, okay, the timing looks good, so I should see some sort of reaction off of here. If not, price is not going to give me this kind of setup. It's going to, if it's looking for something lower, it's probably going to dive through it. Does that make sense? I'm okay to average down in here according to what I'm trading for when we get like higher time frame runs on liquid on on liquidity. Yeah, and you can risk sync. I actually have to learn to be better at that because that's such a great tool to use. Multiple accounts and you get, three accounts that get entries and the setup works and now three accounts are getting, you know, if it fails, you're getting very minor like if you're getting down here on one of your accounts, okay, one account lost 65 bucks if that's where you're starting. Okay, another account loses 117 and this one loses 150 at the most. So you could definitely risk sync. It just you don't always get it might not always hit 0.79. Monday, October 20th. Let's see what we got up here. Let's see what kind of setup. Dun, dun, dun. Climbing. Okay. So we have that 10 a.m. high, the 10 p.m. runs it. We're in Asia. And see, look at that. 3 taps on the 0.5. So, but what happened? We're in this candle started, the 10 p.m. candle. Okay. Here's our line from the 10 a.m. high. We already got one major reaction off of it. So when the 6 p.m. candle hit it, look what happened. It runs up and then we get a massive reaction off of running the 10 a.m. high. Then we run the 6 p.m. candle high and the 10 a.m. candle high again. Okay. We're waiting. None of this is showing a tag and a low set in. This is really a massive move. Okay. But it validates what's going on. Slowly drives up. We get a nice move down below that entry, and then we get the 50% retracement. Okay, and depending on where you're looking to take, like if you're looking to take it at you know, basically the low that's put in by a 4-hour candle, that could be your play. You could have take profit set right here. Um, yeah, when the narrative supports that, and also if like here we have kind of like a stalling of price, right? Like we have candle bodies that are stalling. Okay, so we have 8 hours right here where price really isn't driving anywhere else. And I get it's the end of the day, but when you're reading price action and you have this massive move up and then price starts stalling out and we ran all these previous highs, right? And then we're in this. Oh, here's the other thing that lined up because I remember getting in this trade. You have the 10 a.m., the Friday 10 a.m. open over here. That lines up with this high as well. I can't remember if this gets ran. It comes very close, but it doesn't run the high over here. But again, opening price, sensitive area. And we just finished balancing this area back up. like there has to be some sort of retracement. Like price never just continues up. Yeah, right? Because what's happening is, remember, we're looking at like we really want to understand like price action and like what's happening. When we take out highs or we rebalance an area, we're looking for price to go back down to some sort of discount and rebalance. And so if we look at the measurement of this area we ran, notice that nothing closes above this candle high that was put in. Yeah, we get a wick above the high, but nothing closes above the high. And we have a leg that moves down, and then we can't even close above this leg. Okay, all these 4-hour candles. And what do we get? Price just runs back into discount. It's literally premium and discount of the range. Let's see, am I adjusting? Oh, like where my take profit's going to be? Yeah, so for fibbing, like if I fib this first one, it like almost gets there. But the initial reaction off of this is it doesn't even come up into here. Okay, so then if I go to the next one, really there's no reaction and it runs it again. And that's now at equilibrium. And then this one right here, oh, now we get the reaction. So we want to look at like the general idea of the mechanics of ranges, because this is that's all that is this is just looking at the mechanics of ranges. And you get your little threes right here, one, two, third, and then you finally get the move back to premium. Um, and you can see that price just does that along the way. Like I mean, even if you keep like moving this stuff down, and this is where we talk about like adding into layers of price. Okay, so if we get in right here, like we don't want to add into our, if we're going to average up, we don't want to average up at the lowest point. We want to wait for price to give us a good entry back into discount. So you could either fib or you could just use a gam box. Okay, because the gam box now allows us to say this is just a basic premium and discount tool. So if I average up here, when I take this, it goes to this. I'm still positive. If I average up here, now my initial entry goes from there to halfway between, and now I'm going back into negative for a little bit. And so you can try to use your averaging up into always into an area of premium when you're shorting or into an area of discount when you're longing. So your initial entries don't get bumped up closer to where you could possibly go into a negative again. Okay, let's see. This is 10 a.m. and 10 a.m. came back up here. See, you get some tricky price action. So you have the down close candle here, but notice how these don't close below it. It just runs it. this is a pretty big. So here's your previous 10 a.m. low, and here's your 10 a.m. candle that runs that low. You get your run on liquidity there. Kind of have some equal lows back here. Um, this would be a stop out, but again, I don't like that candle. And then the next one it gives you, if you do use this low, okay, to the first high right here. Okay, this is the first high put in. It gives you the 50% retracement. So you at least get that. But you have a bigger area. Price could come all the way down in between here and use this as like an order block. And then our high, what do we get on this one? This is a larger range and we're in a compressed area. So I don't think like, I wouldn't be shooting for these ones up here. I'd probably shoot for like one because this is such a big range and have runners at the next fib levels or look for structure back behind me. Okay, so kind of a lot of overlapping structure. So really what are we doing? We're probably like rebalancing an area. So if this was the initial like range that we fibbed, then we might just be rebalancing to the bottom of that range, which we end up doing. Okay. So if this was my initial short and price is going to stay short on the higher time frame, then price rebalances back up into that initial range we fibbed. And we get the reaction off of that. So that kind of doesn't fall. So this is, again, depending on your size, but if we look at this, we get a down close candle that runs a low in the low of the 10 a.m. We get a nice green candle that fully engulfs it, okay? And then we get a nice discount entry pattern. Um, so for these, this is I use these just for mechanical setups. Really, what levels are you talking about? 4 hour, or are you talking about like the fib levels? Yeah. So I kind of mesh these. I'll mark them out. I like to use ATR levels. Um, and so like we're in a compressed area right here, like price action is not really breaking out anywhere. So I'm expecting it to kind of stay ranged. ATR levels are just average true range. So this is on the day. Okay, so this is going to give me my levels for every day. And usually my targets will tend to be related to the 4 hour chart in conjunction with these. If fibs happen to match up with it, like this one right here, because this is such a big range that I'm taking the low to the first swing high. And notice how these other ones wick above it, but they don't close above it. So you're getting that like price isn't breaking out of this range just yet. That's why we don't want to chase. Okay. We always want to measure to give us an opportunity to get the most discounted. So my 4-hour open really is this blue line right here. Okay, so when I look to like take profits, first I have to take profits at an opening price before the high. I can't just always hold for that because this is also a sensitive area, which this becomes reactionary. Look at that. Two little wicks hit it. But what we have near there is we have like price stayed within these two ATR ranges. They're red. Okay, this one, this would be our put trigger or our bearish signal. This is the median, okay, where price closed the previous day, and this is our buy trigger. Okay, so when price starts getting up here and holding, or price fails to break below the put trigger, okay, like right here, we can watch price action around these areas. Remember, it's not gonna look just perfectly set up for us to be like, oh, it's so obvious. Nothing in the market is, you know, going to be extremely obvious for the majority of the time. Yeah, there's going to be the A plus setups where you're like, dude, I could see that from a mile away. It's beautiful. And we want to capitalize on those. But if we're looking at how price is reactive to this level, does this look like price wants to just like really break through and start going lower? Every time a candle hits this level, look at massive candles up. Okay. Rebalance, it drives a little bit lower. A massive candle up compared to the candle that drove lower. Low. Now it's messing around, wicking, but it's not no continuation. There's no continuation. Goes above it. Now candle bodies are getting a little bit higher. Okay. And then we have the timing aspect of it. So now we have another candle that drives below here because it put in a bunch of wicks here. Now we have our 10 a.m. price level marked, which is right around here. And every time price drops down below this level and this level, now it's pushing back up. Drops again, and ooh, a massive push back up above both levels. And now we have a failure to even touch this level once again, but we get the discount. Um, like let's say I had an entry right here and it missed it because it just tapped the 50% and went. Um, I would probably jump in right here and I would have like maybe a stop loss set right here. So if we're going to get another move that dives lower, then I'll just get stopped out and I'll re-enter the same amount here. So it's like a very small stop because I don't want to, I still have to respect that. What if this setup fails? What if it's one of the small times where it actually fails? Now I'm even like more drawdown because then I have to say, well, in order for me to use this mechanically, I have to respect the low and say, I'm going to set my stop here. I'm drawing them from, so here's our level, our time level. Okay, it's a 10 a.m. low. The 10 o'clock candles opened up. We get our first initial run. We get another one and we get a nice close above it. So I'm fibbing from this low to the first high that's put in. Okay, I don't care about these because I want to know this range right here. Is it going to give me a discounted entry? And so you can see that even within small ranges, we're still getting mechanical plays that over time should give you, even if you took it to this and just said, okay, I'm just going to the one because that's a huge range. That's, you're looking at 88 points, right? Let's Let's use our entry tool, our long position. Okay, so it's almost a 1 to 3. It's 2.94. And we have multiple confluence just on the basics of where we would see reactions, right? We have a fair value gap. What is price going to do when it wants to deliver lower? It's going to put in a false low. It's going to come back up. It's going to reaccumulate. Then it's going to deliver lower. What's it going to do when it wants to deliver higher? It's going to put in a false low. It's going to come back up. It's going to accumulate. It's going to come back. I'm sorry, false highs. It's going to come back to an area of discount, and then it's going to push higher. And there's different ways that it can do that, but the principle is the same. I mean, even like let's get some of these out just to clean up this chart. I mean, we could even use it really for, here's the high put in. We just balanced an area. We took out the opening price over here. Okay, to the first low put in. Fib that across. What do we get? We get areas of premium before the deliver lower. And candles hit 2. So even just looking at this from a higher time frame aspect and price action aspect, even if you put this on your 4-hour chart and you're trading London or whatever, you could say, look what I got. If I expect this high to hold for right now, because this was a major balance. This was actually a balance on the daily level. Like here's the Friday, and here's basically a daily order block. We basically balanced a 4-hour and a daily chart up here. So now that this whole area is balanced, price needs to return and balance some of this while returning to a previously accumulated area for continuation breakout. That's what we want to see. Since we're taking it day by day and we're going to play the return of price back into the accumulated area before the initial breakout, which is what we get, right? There you go. And so we can take a look at some of this stuff where here's a deeply premium area and we want price to deliver into discount. Okay, we have a 2 p.m. candle high. And we have the 2 a.m. candle. So London runs the 2 p.m. high, and it also taps this opening price, and then it starts the move lower. And so if I fib this level, this is really deep. This is a really great entry versus now the 6 a.m. candle. Here's my entry. Look at how it hits that. Look at how even on the 4-hour chart, it's using these fibbed levels in conjunction with how price is delivering. See if we can find that. This is October 22nd. There we go, over here. Whoops. Just lock that for a second. It's the high. Okay, here we go. See this candle right here? Yep. Okay. So we get the run on the previous high. So all the greens kind of mesh together. Even right here, it gives us a very mechanical setup. We have these highs ran. We have price engulfs this candle right here. We have a low that's set in. And we have an area into premium. And then price starts driving lower. But look at what your risk reward is. You're looking at a 4-hour time frame. And London traders, you might be saying like, dude, I want to see this like drive like this low at least right here. I mean, to risk 5 contracts, to risk $72 just for that. And if you're holding runners and you're looking at, well, we've accumulated up here. Where's our area of discount? Okay, here's our big gam box of this range. Where's our area of discount? So if I go, oh, 50%, we got a 10 a.m. candle. So let's see what this 10 a.m. candle goes to. I mean, even if you take it just to the midpoint of that candle at the 50%, you risk $72 to make 4 grand. But look at how we're setting up narrative and reading price action. Like we have to get good at reading price action because we have to know where price is at in the delivery. And we have to know that when there's areas that are balanced or highs or lows are ran, the odds are going to be in our favor to fade it. If we go look over here, because it's like, okay, well, how do we know we can't like take a setup right here? So let's go look at when price invalidates it running a high and reversing. Guys, you got to spend time reading price action, studying the charts. I'm telling you, it's going to help you so much, and just understanding like premium and discount and how price delivers and where to measure. Like you start, let's say you averaged into that, or let's say because that was 72, you're like, oh, I'm willing to risk roughly 200. So 217. I mean, that's insane that you could risk $217 and make 13,000 just by saying, okay, we have levels that we can match up, 2 p.m., 2 a.m. We're watching these areas where price is consolidating. We've taken the same principle with this should be a protected high for a little bit, and we're willing to risk going short in this area of premium for price to deliver into discount. And who knows, maybe this area right here, we're going to get rid of this fib for a second. Okay, maybe I'm looking at this range as a range of premium and discount. Okay, this low was put in here. This high was put in, nothing closed above this high, so I'm measuring this range. usually when this range isn't the range that price is looking at, it like gets real close to the 50%, but it fails to like tap it because this would have tapped and continued higher. So it doesn't tap it, it consolidates, but we're not moving higher. You get this fake out right here, okay? But what do we have here? So this is the initial just whipsaw of as New York's getting ready to open. Price moves all the way back up here. You get the opening price. Okay, it runs into the opening price of this previous candle, 10 p.m., and then it dives. And it's really diving for that discounted price of this massive leg that moved up. And you can see that the candle bodies get into the discounted portion. And this candle actually delivers to this open over here. I really, when it comes to time frame stuff, I like 4 hour structure. Um, so like protected highs and lows, like this high right here as an up close candle and a massive move away. Like this is going to be a protected high until price does its thing. Okay. And that could be days later, especially if we're looking at the 4 hour chart. Okay. And it's not till price comes down here, reaccumulates, doesn't even run it on the initial drive up, but comes back into discount. And then we get the continued move higher. So as we start doing that on a lower time frame, see if I can find an example. Um, let's go to, okay. So again, this was a really strong setup because we had the down closed, hit our 50%, same time. Like I want to see this be a protected low. Like if we're going to react off of a fair value gap, which we've already shown reaction from, yeah, we kind of swept through it, but really look at how far up the candle body closed. So basically it hit this and like buyers were stepping in. We'll just take this off for a second. Notice how this low though is a up close candle. Okay, up close candle. Like I'm looking for this to get ran. And the same principle is going to be for like Monday. Again, these are down close candles. So I don't expect these highs to like this doesn't look like it's price on a higher time frame like setting in a high. And you have to go back and look at like old price action on higher time frame to look at like when if we transition from a bullish to bearish market, you have to go in and look at like how that was set in. And usually it's an up close candle because they really want to drive price higher with authority so that people get trapped at these extremely high prices before they shift the market to a bearish like shift. So this I want to see be a protected low. We ran the up close candles, okay, and we fibbed that, and this is holding. This should be a protected low because we went into an area, a point of interest, imbalance, and then look what, and we can match on the lower time frame. So if we come all the way across here to this previous day, what happened on the 1 minute chart? Well, look where price closed at with the candle body. It balanced. It finished balancing this from way back here. So again, what happens after price balances a cycle? We want to see some sort of reaction. If price was going to continue lower, we have to study so we know what we're looking for. And look for areas of price where like prices just dove through the low, and look how price reacts around it. Just so you can see what price action looks like. And you just go back in time of examples of like, okay, where was a low? Like you could go back here and look at the low that the 6 a.m. candle put in, and then how did price react around that low? But really, this high, it would have been great to run this high. And if price is going lower, this should have just continued right through these lows. And then this low that was put in should now be an area where I could basically put a gam box and be like, okay, well, that should be a discount. I'm sorry, that should be a premium entry for continued prices lower, right? So price would drive through here and then maybe tap up here and then go, right? Something similar to that. Let's see. Okay, as price is delivering, when we're looking at like protected highs and lows, I'm looking at price action like this. So if I miss entries, okay, and let's say I'm just looking for entries in discount or in premium because I want to catch this. Okay, and this happens, and like as I see up close candles and big candles, this looks good for me for like a protected high until price finishes its objective. Okay, and whatever that objective, but we have to trust that the possibilities and the probabilities would be in our favor. And so look at how we have up close candles setting highs, and then we have nice down close candles the moment an up close candle high is set. Okay, now this one gets ran, okay, after this move down. And price will do that sometimes. But at least you have the ability to get back in and set your stop right at the new high and say, okay, I'm going to trust that now this is the high that price really shouldn't get back up to because it's still delivering to where I'm looking at on a higher time frame. And you can kind of see that happen continually along the way. But here's our initial start. And basically we get like pretty much pretty much this leg that went up and created this price action. We're pretty much balancing this whole back to this area. Does that make sense? So once we get the balance and we get this shift, even then we still get our entries. Notice how we haven't really hit anything major right here. And it sets in a very long wick up close candle. Okay, this gets ran. And then let's just look at price action around it to the next high. Nothing. No retracement into discount. I go to the next one. Not even a retracement into discount. Okay, so see that? See how we can look at price action and we can say even though this balanced part of a bigger range back there and it ran this low, it's not one, you have this and you don't even have a return to discount. Now this one, this looks good initially, right? To the high, nice retracement. We don't break out of the range, we come lower, we run this low, and we finally break out of the range, but this got ran. Doesn't close, so technically you could try to get in here. But if you fib that, we don't get the retracement back in again. And then look what price does around that area. No, no movement to even close above this candle after running this low. Looks like it's going to run it, creates equal lows, and then just really heavy down close candles. Here's, I love matching this stuff up with the quarterly. Yeah, you can depend on how large the range is, Darius. But like when this aligns, little like Q3 reversal. And we're really respecting that premium discount area. That looks really nice for like higher time frame targets, which we end up getting all the way down to the fair value gap. Yeah, you're looking for the range that actually like balances or like really sets the tone for liquidity, right? And usually you're going to get a couple false highs first. So again, if we look back to higher time frame, and I'm marking stuff out, okay, what do we have for here? Well, we have this 10 a.m. candle, and this goes to the look back. And really, I just have like the low of this candle, okay? You can do the mean threshold, but it kind of starts getting in too many lines. Open is way up here. We don't get a movement way up here. I actually wanted to see this go up there because there's some other stuff up here that was going to be a good like rejection area on this. Where's that at? Yeah. I wanted to get an entry back up here, TMSO for short. Didn't give us that though. But look at price around these two areas of 10 a.m. The high is up here. We tap it, go down. We get above the low. So here's the lows. Tap that high again, then we get the massive movement really below both of these 10 a.m. areas. And pretty much we get a rebalance of this range, right? Like here's this initial move up, and then price really dives down. So we're really like, again, this would have been nice to come up here a little bit higher. It just didn't do that. But look at these reactions off of this 10 a.m. high. I mean, price is really unwilling to even get a candle body above it. So we're balancing a big range. We're hitting a timed area. We have quarterly working on our side with this time theory. There's multiple areas of confluence. And this is these are aggressive entries if you're getting in short up here. But you do have the up closed candle highs, okay, 1 and 2. So typically you're going to get some sort of run on liquidity before the final move. So, I mean, turtle souping this would have been great. And then again, if you're going to like turtle soup something with all this in mind, you just have to respect the next high as the stop. But look at that. I mean, who cares if you're wrong on that, and then it sets up for something else later. There's aggressive entries, and then there's just mechanical setups. I was talking to Swag last night about that, and just trying to help him with um, trying to just stick to like something mechanical. Again, I think when you're new, like JD's been training a long time, and dude, he always has like so many things he's monitoring, and when they align, he strikes. Like he's really great about that. Like I tend not to look at ES while I'm trading NQ just because I'm focused on other things, but like his ability to do that is like phenomenal. That's something that I have to work on because that's just more confluence for what he decides to take, which is amazing. Like look at the trade in the afternoon and holding that using ES and then his time theory, like just an awesome trade. I think when you're new, it's hard to juggle all that. So if you can learn to be mechanical just by looking at, higher time frame, where are we at, discount premium, what's likely to happen, what kind of reaction should we get if we go from an area of discount to premium or premium to discount, we should get reactions from those areas. Yeah, yeah, I will. But again, I look at ranges and structure because price action is going to tell me. Like if ranges are being respected, then that tells me that um, like price is delivering in this direction. So like how we measured that, and like even though you get one more run, it still respects it, And then, okay, so I go to the next range. Okay, fail to even get up here. And then I go to the next range. Okay, fail, price is in a hurry. Okay, and then I go to this next range. And look what happens. We move out of the range, but we come back into the range, and we're balancing the premium of this initial range down. But we're still holding the high of this range. So that's going to happen along the way because it's not always just a 50 bump like this staircase. That's too predictable, right? But what happens after that's what we need to look at. Oh, fails to get to 50. So price is still delivering lower. Like we're not breaking and sending ranges up the other way until we meet the delivery. And guess what? Here's another ATR level down here. This is a -1 ATR move, this purple. So that means we almost hit like a huge move lower for the day. So anytime I start getting into like, that's why I have this one as gold. Anytime I start getting into these three, I'm also looking for price action. So candle bodies are holding this ATR level. And now what do we get? Oh, price hits 50%. Look at the initial reaction. Okay, measuring this range right here. Hits 50%, fails to continue lower. Now drives out of the range. Drives out of the range, back into the range, and drives higher than that range that was set. Okay, so then I look at this range. Oh, now we're failing to get to 50% of this range that drove in and rejected higher. So see how I'm looking at how like what price action is showing me? Because really that's all it is. It's ranges that are built together on a fractal scale all across the time frames. Um, I do want to see I do want to see like times match up. Yeah, that's an ATR level indicator. I do want to see times match up because the problem when it doesn't is you can get a lot of time wasting. So like what do we get? We have a 250 macro time. And like basically the range that we had measured that didn't hit 50%, but like closed out of the previous range and then went back in and then started the move up. We come out, we run the liquidity that's in here, and then we take off. And this was just kind of like a lot of wicking, a lot of overlapping, very small movement in price action. Okay. Until we start getting to the 250. So yeah, let's see, 950. Okay, sometimes macro doesn't do the delivery, but I mean, this was basically building the accumulation for the manipulation, then distribution. Do, do. Here's our 950. But a nice accumulation, manipulation, distribution. Um, yeah, so as we're notice how these notice how the candles that price really moves away from, down close candles. Notice how they keep being the protected lows. See the real wicky down close candles? Oh, it gets ran. Here's too smooth. Here's a wickless. But then we get these ran, but this low gets protected because it's moving down and then really closing above it. Moving down, really closing above it. Okay. And you can see that along the way, just like how these up close candles were being protected along the way down, right? Even this one, pretty long wick for the body, but you get a nice movement off of it. So this wick's all the way up, but it's protected. All these candles are protected while it's moving down. Then we get a nice down close. So this is like really good price action. So as you're trailing and you want to add, you can trail stops to like, you know, now I'm gonna bring my stop up to here. Now I'm gonna bring it to here. Oh, this did the running of liquidity. Okay, perfect. Now it's to here. Okay, now I'm moving it to here because you can see how price reacts after a strong down close candle. It's still pushing much higher until it meets its objective, and then we get the change. And it's still, even though it's not ideal, even though it's down closed, kind of a weird bottom set here, we still get the return to zero point 0.5 and price delivers to TMSO, which was never, this didn't tap. And notice how this one is the long wicked candle, nice little target. Okay, about -3. um, I gotta go pick up my daughter from school. It's about an hour and a half of just talking through price action. Um, like I said, I'm gonna try to do this like once a week because I really do think that learning to read price action while adding it to how you trade and what setups you like to take, it's going to help you feel a little more relaxed and like knowing that okay, I don't have to feel like price is not going to give me a chance to enter because that's really where our bad trades come from, right? Is one if we're off sides and we get an entry where we kind of chased. So if we can eliminate that in and of itself, then I think we can continue to be successful and really lower our exposure to how much uh, risk we're exposing ourselves to and looking for high probability what price should probably do and kind of get into that framework of mind like okay, what are the odds of this happening here, and you can tell yourself that like we showed on the higher time frame. Wicks are wicking above stuff, but candle body highs are closing lower and lower. So anytime price moves up, like what are my odds of like wanting to take a breakout trade when price is already up here? Probably not the best decision. We probably want to say, well, I think the odds are with me to go short. So, all right. You guys have a great weekend. Um, we'll catch up with you over the weekend and next week, and we'll keep doing these little things once a week, just talking price action. Bring your questions, and if you want to come up on stage and like talk and ask questions, I'm cool to do that too. Like to me, I just want like an open forum for people to like talk about stuff and we can go over charts and price action because I think that helps build good habits for trading. All right. All right, you have a good one, guys. Catch you later.